Bitcoin is once again at a crossroads. Price is hovering near $60,000. Momentum is cooling. Sentiment feels uncertain. But beneath the surface, something familiar is quietly forming. A structure that mirrors the 2021 cycle. A rhythm that long-term investors may recognize. The real question is not whether Bitcoin can pump tomorrow. The real question is this: is Bitcoin repeating its old cycle, and are we currently inside the boring phase that historically comes before expansion? Let's decode the pattern. Current market overview, the 60K battlefield. Bitcoin is currently trading between $60,000 and $70,000. On the surface, this range looks uneventful. There is no vertical rally, there is no panic collapse, there is no dramatic headline moment. Instead, we see compression. And historically, compression phases are not random. They often represent structural transitions inside a broader market cycle. The $60,000 level has now become the most important psychological and structural support in this phase. It is not just a round number. It represents a prior breakout zone, a liquidity cluster, a macro sentiment anchor, and a technical level that separates bullish structure from potential breakdown. If Bitcoin holds above this level, the market structure remains intact. If it loses this level decisively, a deeper corrective scenario becomes more likely. So far, the market is defending it, but the structure forming above it is what makes this phase interesting. The old rhythm theory explained. Markets move in cycles, not perfectly, not identically, but rhythmically. The 2021 cycle followed a recognizable structure. First major top, sharp correction, second top with weaker momentum, distribution phase, prolonged base building period, and breakout to new all-time highs. That entire process from peak to new expansion took roughly 30 months. Now look at the current structure. First top, December 2024, after reclaiming the old all-time high. Second top, October 2025, at approximately $126,000. Current phase, 2026, compression near 70K. The similarities are difficult to ignore. However, it is important to emphasize, this is not proof. This is structural observation. History does not repeat perfectly, but it often rhymes. Revisiting 2021, the first top shock. In March 2021, Bitcoin experienced its first major top of that cycle. Momentum was overheated, retail participation was euphoric, RSI was stretched into extreme territory. When markets reach that state, corrections are not emotional events, they are mechanical resets. And that correction came swiftly. Now, fast forward to December 2024. For the first time since the 2021 crash, Bitcoin flipped the old all-time high and surged aggressively. That move created the first top of this new cycle. Just like 2021, momentum expanded vertically. Just like 2021, sentiment turned euphoric, and once again, a cooling phase followed. This parallel is what raises eyebrows among technical analysts. The second peak, strength on the surface, weakness beneath. In October 2021, Bitcoin printed its second peak after recovering from the spring correction. Price looked strong, headlines were bullish, momentum appeared healthy. But underneath, something had changed. RSI was weaker, volume was declining, follow-through was limited. The market topped. Now compare that to October 2025. Bitcoin reached approximately $126,000. Again, price looked powerful. Again, headlines were optimistic. But momentum indicators showed subtle weakening compared to the prior expansion. This does not guarantee a repeat, but structurally the pattern is remarkably similar. The role of RSI divergence. One of the most discussed technical elements in both cycles is bullish RSI divergence during corrective phases.
In 2022, after the 2021 crash, RSI formed a divergence while price stabilized. Momentum stopped falling before price fully recovered. That divergence signaled exhaustion, not immediate reversal, but structural stabilization. Now, in 2026, weekly RSI is hovering near similar exhaustion zones. If price holds 60,000 while RSI begins forming bullish divergence, the resemblance to 2022 strengthens. But again, this is conditional. If 60,000 fails decisively, the analogy weakens significantly. The boring phase nobody enjoys. Every cycle contains a phase that feels frustrating. It's the sideways grind. It's the compression phase. It's where volatility contracts, narratives fade, and retail interest declines. In 2022, this base-building process lasted months. Price drifted sideways.
Just compression. Historically, expansion follows compression. But expansion requires time. The importance of time over hype. From the 2021 peak to the 2024 breakout, roughly 30 months passed. The key factor was not hype. It was not a sudden catalyst. It was time. If we apply that same cadence to the October 2025 second top, expansion may not meaningfully accelerate until 2027 or even 2028. That implies most of 2026 could remain structurally compressed. That scenario would frustrate impatient bulls more than bears, because boredom is harder to tolerate than volatility. What happens if $60,000 fails? It is critical to address the alternative. If Bitcoin loses $60,000 with strong momentum and fails to reclaim it quickly, the structure changes. That could open deeper liquidity sweeps, sentiment capitulation, extended consolidation. The bullish rhythm depends on holding structural support. Without that support, the comparison to 2022 weakens. Markets are conditional. There are no guarantees. The 120K, 130K question. Some analysts project that if the cycle continues rhyming with prior structures, a retest of $120,000 to $130,000 could eventually occur. But timing matters. If the 30-month cadence applies again, that move would likely arrive later, not immediately. Markets do not reward impatience. They reward positioning and discipline. The psychological layer. This phase tests conviction, not because price is crashing, but because nothing dramatic is happening. Narrative fatigue sets in. Attention shifts elsewhere. Historically, this is where long-term positions quietly accumulate. The crowd prefers excitement. Cycles require patience. Compression before expansion. Bitcoin has historically followed a pattern. Aggressive expansion, violent correction, long compression, renewed expansion. We may currently be inside step 3. Compression reduces volatility. It rebuilds structure. It resets expectations. Then expansion returns, but only after time has done its work. Delayed, not denied. If the structural rhythm holds, Bitcoin may not collapse, and it may not moon tomorrow. Instead, it may simply grind. Base building, rebalancing, resetting. If history rhymes, the breakout chapter may be delayed, not denied. But the key variable remains $60,000. Hold that level, and the old rhythm remains alive. Lose it, and a new chapter begins.